The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got 24 minutes to go until the opening bell, and your markets cascading to lower prices right now, and a little geopolitical risk. Ukraine and Russia seems to be spooking the market just a little bit. Something is. We got S&Ps right now off a full percent, off 55 points. We were just off a full percent, just under that number. But you see the escalation. 3 in the morning, we trade lower. And boy, just getting ready for the program at 8 o'clock in the morning, we were at 59.06. Boom, 50 points down we got in the last hour in the S&Ps. As fierce, escalating. NASDAQ 100, you see the slide from about 20,600 down to 20,400. We're down about a percentage point in the NASDAQ 100 as well. Dow off just more than a percentage point. We trade down just below 43,000 for a moment. We're trading down 466 points in the Dow, just more than a percent, 43,082. And the Russell down 1.2%, off 28 points at 2289. Bitcoin, a little bit of a sell-off with the market, which is interesting now, right? The market sells off, Bitcoin sells off $2,000. But guess what? You're still trading at almost $92,000 in Bitcoin. Crude, a little bit of a bid yesterday. We're trading at 69.02 right now. Gold catching a bid up to 26.34. We jump to notes and bonds. And what do you got? You got higher price, lower yield coming at you. We get the 10-year, 4.36. 4.36. Now, what's remarkable, all right, and I've been talking about it. Let me get this one right. What day was the election? I should know this in the back of my head by now. Yeah, the 5th. Yes, Tuesday the 5th. That was the slide at 7 o'clock at night when the polls started coming in that Trump was going to win. Folks, we're right back to before that move in yields. It's been quite a reversal. You saw a rip-roaring rally on that evening, but start paying attention to the greater trend right now. Because, yes, it was lower price and higher yield. And zooming in on the daily, okay, that's your daily. That's the big bar. But check it out. All we've done is chop around at that low, and now we're bouncing to higher price, lower yield, 4.36. Nonetheless, little geopolitical risk coming at you. And we'll get into that one. You jump over the dollar right now. There's your move in the dollar. We drive down to almost 106, where it's 106.24. As I mentioned, right, critical area in the dollar from about the 106 to 107 range. We seem to be rejecting that initially. We're at 106.28 right now in the dollar. And yeah, let's go over some of the headlines. So, Ukraine uses U.S.-provided long-range missiles in Russia for the first time. You jump over to CNN. CNBC, as Russia-Ukraine tensions rise. Okay, and then, yeah, stocks fall as Russia-Ukraine war rattles traders. Markets wrap. I saw a headline out there. Yeah, this one right here, right? This is not the kind of speak you want to hear, man. Not surprising, though, when you get into a war. And it shouldn't be surprising. Everything's on the table in a war. It's always surprising when people are like, oh, they said that. Oh, they'll do this. People say there are rules in war. There's no rules in war. That's unfortunately the reality. And yeah, you had Putin has amended Russia's nuclear doctrine that outlines the conditions that would prompt Moscow to deploy its nuclear arsenal. And this is talking about basically that, and I saw the quote, where was it this morning? All right. Here it is. Aggression against the Russian Federation by any non-nuclear state with the participation or support of a nuclear state is considered a joint attack. Doesn't mean a nuclear war is starting overnight, but boy, not what you want to hear. And the market reacting with force. We're priced pretty well right now at the price levels where we're at. And boom, you wake up, S&P's down almost 1%, NASDAQ down 1%, Dow off a percentage point as well. We dip below 43,000. You take a look at the Dow on a daily basis. We just gave up 1,500 points. You're off more than 3%. We're now below the highs of October. back on the Dow, and it looks like 42,000 is your next point that you could get a bid, and that's right where the Dow accelerated. Now, the S&P, we're all not quite back to where that market started. Notes and bonds are. Right, it is interesting that the market still, we'll go back to a 20-day hourly, okay, so you can see the run at Sunday at 7 o'clock. Folks, Basil Chapman's up next. He loves those arc formations. Boy, if that doesn't look like a pretty symmetrical arc that ends with the market being back down at 57.50, right? Quite a rise. These are hourly bars we're looking at. That was the chop coming into the election. Now, that's the Dow, that's the S&P. You take a look at the Dow. You can see almost back to that level as well. NASDAQ, little ways to go. Excuse me, that is the Dow. Excuse me, the NASDAQ almost back at that level. The Dow is the one that had caught quite a bit, okay? And then you have the Russell that caught quite a bit as well. But check out the Russell, man. The Russell traded up 10%, and we're almost going to give it all up. You traded from 2,200 to 2,455, and we're now back at a 2,200 handle in the Russell. Now, the point of going over all these trends is just be aware that the market's still trying to figure out where we're going to go on this next geopolitical front, as we're still dealing with earnings, inflation, a Fed that's not sure of where we're going from here. You take a look at the 10-year, all right? The 10-year is right back to where we were prior to the election. So don't think that it's automatically higher interest rates across the board. There's a lot of variables that are going to go into play in terms of where Trump is going to try and push a lot of his policies, as is the case in any president, but more so with Trump. There's a few more things that were said on the campaign trail that you got to wonder whether they're going to become a reality and how they're going to impact interest rates going forward. And then we finish it up with the dollar. Now, the dollar is a different one. Okay, and that's why you finish it up. Yes, we've pulled back from the 106 to 107 area, but look where we were coming into the election. We were at a 103. We're now at a 106.26. That is a decisive move. We just went over markets. We went over yields. But look at the dollar. Remarkably strong, even though yields have pulled back from that initial move. And we'll see if the dollar, maybe the dollar holds a little bit while yields ease a bit. They're all related, and we're going to get to find out. All right, we got a couple equities moving this morning. You got Walmart. They beat, and they give it back on the earnings call a bit, it looked like. You trade up there. Earnings call begins at about 8 in the morning. You dive up to $88. You're back to $85.97. I'll tell you, folks, in my household, I was just talking about the other day. I looked up. I'll give you a great example. Walmart. Tommy's looking at a Nintendo Switch game for Santa for Christmas, okay? And he likes Super Mario Wonder. Occasionally we'll walk around Target. I'll let him play little games in Target. He plays this game, Super Mario Wonder, he likes. So I'm like, okay, we should ask Santa for a game if that's what you'd like. And I looked this game up on GameStop. It was $60 new, same as Target. GameStop, it was $52 used. I was like, geez, that's not really a bargain for a used game when they can be scratched. Long story short, I pull it up. It's cheaper on Walmart new than it is GameStop used. Walmart, folks, they are just crushing it, for lack of a better term. And we're going to talk about their earnings when we come back because, yeah, average ticket size up 2.1%. Upper income households looking for value drove growth. It's across the board, man. They beat everyone on price. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We get the markets bouncing a bit off those lows. We hit 58.55, and just like that, we're coming back to test the lows of 4:30 in the morning. We're trading at 58.79 right now. Watch out in this market, though. If this market really thinks that there's a geopolitical ratchet up in terms of Ukraine and Russia, that would not be good. This market is priced for, I always say it, lack of a better term, almost perfection with the multiples. Now, we get NVIDIA earnings tomorrow. That'll be a big one. We're going to go over Walmart strong numbers right now. But yes, the potential for that type of escalation could disrupt everything with where we are in this market. It's a tail risk, but you better believe it's present in this market on a short-term basis, as we see today, where you drop a percentage right out of the blue. All right, we jump over to Walmart. So yeah, it is interesting, right? Even like that, something super simple, like I was talking about coming into the break, a Nintendo Switch game. When I pulled it up, I actually said to myself when I started searching it, I said, you know what? Nintendo is not going to be one of those companies that allows Amazon or Walmart to undercut the next person. They're probably going to be something that the games are pretty much priced across the board, right? Otherwise, everybody would go there. I think the same something, consoles in particular, right? I don't think Walmart undercuts people on consoles. Maybe they do for a good Black Friday sale, but in general, I don't think they do. Otherwise, every single person would just go buy a console at Walmart. So how does that work to a certain degree, right? There are some price points that they stick on to make sure that they can sell them in Best Buy, Target, wherever they are, etc. But nonetheless, even on a simple thing like video games, Walmart beats. And guess what? This day and age, everybody is price shopping, okay? I know it's a long, wordy explanation, but boy, it makes sense. We got two articles that I pulled up this morning, and these are the two most interesting articles that I found, okay, of how they tie together and how I've been thinking about the economy recently and just the change of trends that we are making. Now, you jump over to Walmart, okay? Walmart. This story's been going on for a while. They're trading a little bit higher today. Now, I say a little bit higher. This thing has been on an absolute tear. So yes, you're barely positive today. You just traded from 50 to 85. You were at a low of $40 when they were really suffering in the middle of 2022. You put this thing back on a monthly, and this is basically, check it out, a 1 to 1.618 expansion going on from November 15th to the highs of 2020. You pull back briefly, and then we're doing a 1 to 1.618, which would bring you all the way to $93, folks. And look at this run that we've had since the lows of 2022. Okay, this year alone, one red month. And look at some of these months on a percentage basis. All right, a remarkable acceleration for Walmart. So this story has been going on. Making $100,000 a year, how about roughly 75% of share gains for the quarter? Yeah, it's happening. I'm not the only one that's looking up products everywhere, folks, okay? I shop at Sam's all the time. Now, Costco would be a big competitor. They don't have Costco out in Lakeland where I am. They have one in Tampa. But yeah, it now expects net sales to rise 5% for the year versus the previous guidance of 3.75 to 4.75. That is a mammoth increase when you talk about the numbers that they have done. Yeah, price changes were roughly flat for the quarter. Grocery prices slightly higher than they were last year, though other consumer products are cheaper. And yeah, they haven't been on a juggernaut recently in terms of higher price coming at you. Now, that was one article. I wanted to touch on this one. Holiday shopping off to a strong start is how they put it. Sales rose in the latest quarter, helped by demand for toys and other goods. It is interesting, myself again. Trust yourself a little bit, folks, okay? It doesn't mean that, you're going to drive the economy, but when you notice value or something and you change your consumer habits, you may not be the only one. And I'm putting that lightly, okay? Comp sales from stores and channels open at least 12 months, up 5.3% for the quarter. These are mammoth numbers from Walmart, okay? Broad demand for its goods and market share gains across economic groups, yeah. Including higher income households. Analysts were looking for 3.9% growth, and they're up 5.3% for the quarter ended October 25th. People are shopping a little bit earlier this year. I don't think the holiday season is going to be a problem. Part of that is just like people in the upper echelons of household income, they're more price aware when they're shopping. People during the holiday season, okay, are in the same way making sure that they're looking for sales right now. We've all become hyper aware of the price differences across retailers, and it's changing our consumer habits forever. In my household, folks, okay, I used to love Bounty paper towels. Man, they rock. All right, now maybe I'm just a child of advertising, but there's nothing worse than getting some bad paper towels that don't do the job. You're cooking, you're cleaning, right? You're saving money on some cheap paper towels, but meanwhile, they're basically toilet paper. Point being, I buy Sam's paper towels now. They're an outstanding value, folks. If you shop at Sam's, go get their big paper towels. They're just as good as Bounty practically. You know what else I buy there now? Toilet paper. Why not? Toilet paper at Sam's, like 25% of what toilet paper costs at Publix. Folks, toilet paper at Publix is 4 times what it costs at Sam's. No matter how much money you have, consumers are making changes, and then we go to this article. It's a perfect segue, okay? This is the big take from Bloomberg. I'm going to post this one in the den. I'll see if I can make it a free article. I don't know how they do this sometimes. You know how they do that? You give away a free article, I think. I know the Times does it. Maybe the Journal does it. But I'll post it in the den, because it's happening everywhere, and it's going to impact these. And you look at something like Kraft mac and cheese. Now, I'll tell you, Kraft mac and cheese, we do eat Kraft mac and cheese in this household. I talk about how overly processed it is. We got a lot of fruit in the household, too. We got bread, and hummus is a staple in Tommy's diet, which is great, some good quality hummus. But yes, we have some Kraft mac and cheese. It makes it in there for sure. Even Kraft mac and cheese is getting traded out, right? But guess what? What's there? Target's brand at 65 cents a pack is what's happening. It's happening, folks. I'm not the only one here. Check out this chart. Mid-price food and beverages are losing out. If you're the private label and you're on the cheap, go for it. if you've built out a super premium reputation that everybody believes in your products and you're willing to pay a little bit extra for it, then go for it as well. Your sales volume is up. If you're in the middle and you're just a convenient brand that is more expensive, yet not necessarily better, what are you doing there? Consumers are waking up and saying, man, now listen, I haven't woken up, okay? I'm not there yet. But yeah, they're talking about what? Costco's Kirkland brand. What is Sam's? I should know it. I got enough. What's their brand? But I got it in the household, whatever it is. And Target's Market Pantry. I just bought some Target Market Pantry peanuts in the last couple of days. Yeah, it's happening. All right, we'll finish talking about this one, but you're seeing it in Walmart. We got other companies go over. Walmart shares up another $2.50 today to $86.861. Amazon's going to have to compete with them. Now, Amazon down with the market, down $2, but we got Target shares this morning. They're a little bit higher. Yeah, they're actually lower now. Stay tuned, folks. We're coming back for the opening bell. Don't go away.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, and yeah, looks like we catch a little bit of a bid. Now, critical area. We're bumping up into this area that you had at 5 a.m. this morning, about 58.90. We're at 58.83. You were just as high as 58.88 coming into the opening bell. NASDAQ 100 off by about 112. We jump back over to Walmart shares, up by 4.2%. 87.42 on remarkably strong numbers from Walmart. You jump over to Target shares. They're flat this morning. Amazon shares down 1.1%. So Google, the Justice Department, they want them to sell Chrome. That's what they're going to push for. Let's see if I got the article up on that one. I believe I do. Oh, it was. Yep, there it is. DOJ is going to push Google to sell Chrome to break the search monopoly. Antitrust officials also seek data licensing and AI measures. And Google says that's going to harm consumers and developers. And we'll see how that plays out. The department's going to ask the judge who ruled in August that Google illegally monopolized the search market to require measures related to AI and its Android smartphone, according to people familiar. Yeah, they plan to recommend tomorrow the federal judge impose data licensing requirements. We'll see where it goes. Google's not really reacting that much, though, this morning. You know, Google's not even down as much as the market right now. You're trading at 176.59. I think they're going to be okay no matter what. Even outside of a world where they could potentially have Google be an outside company. And yeah, it represents a key access point through which many people use its search engine. This is going to be a tough one. So there's a 2-week hearing in April on what changes Google must make to remedy the illegal behavior and plans to issue a final ruling by August 2025. Good luck telling anybody where the world's going to be in August 2025 in terms of that's 7 months into the next Trump administration. Okay, that's you know, the antitrust landscape right now in terms of where it will be then. Good luck to you figuring out that one. Now, I was just reading on the Journal, which was interesting, I believe. Let me get it right. Yeah, this one on Gates, man. It's not political. I don't know what's going on. I mean, it is kind of a sideshow that detracts from everything else. And, you know, shame on Mike Johnson in the House saying that report shouldn't come out. That was put together by a Republican House, okay? This is the gentleman that could be the top lawmaker, and they have a report coming out that he's having drugs and sex with underage girls. What happened to standing up for what's right, folks? This is an easy one. This is the stuff that freaks people out about politics, okay? Not sure why this is getting lobbed. I gave my take on things when it came out. Okay, this is just an easy way for Gates to get out of the House and not have that report become public with witnesses talking about drugs and sex and paying for that with underage girls. No, it's not a court of law, okay? But it's remarkable that this is the one person that's best suited to run the entire Justice Department. We'll leave it at that. Okay, and where was I? I think I just might have closed the other one that I had on there, unfortunately, but we'll pull it back up. Because what it was talking about was the antitrust push that's coming in the final month. So the Biden administration's got 2 months. They're going to do everything they can, and that's why I bring up that Google, that deal, talking about maybe potentially going out to August of 2025 is when that judge is going to make that final ruling. Things are going to change for the FTC, for everything there. Doesn't mean it's going to impact. There'll be huge battles. You can't just reverse things when you come in, but don't imagine that all of a sudden Google's going to get broken up in August of 2025. Because guess what? They're making the final pushes they can in the next 60 days, knowing things are about to change. Justice Department considers divestiture of some Google products while the FTC prepares a Microsoft probe. They're trying to do everything they can before the next administration. And yeah, Google is pushing back, obviously, right? Google has said that spinning off Chrome and Android would harm those products which are offered free to users. It's going to be a difficult case to make in terms of being completely monopolistic when you have so many competitors in that. Google, flat this morning in a market that's heavily negative. And let's check out some of the others. We got NVIDIA with their earnings after the bell tomorrow, up by about 0.8% right now. Microsoft shares down about 0.8. We jump over to Amazon, down about 0.5%. Walmart digesting their earnings, holding on. Ooh, look at the little volatility there, but nonetheless, up by 3.7% for Walmart shares. We check in on yields this morning. A little bit of a pullback. 109.28. We check in on the dollar. 106.24. And yeah, the gold report's going to be out right after the show. Okay. And this is quite a little bounce we got going. You know, you couldn't step in the way of this gold market when you traded from 2,800 down to 2,550. You're looking for a sign of strength? We'll see if we can get some volume. But on a weekly basis, it's a nice pop we got going. We're back to 26.32. You're talking about basically would have been all-time highs a couple months ago almost. Okay? And you put this back on a daily, and you see the action that we're at. As you pull back to the 50% of the recent move, we bounced to 26.32. You know, that 2450 to 2500 area could be in the cards still, but just even some equities, you take a look at some equities here. Yeah, it was New Gold was one, I believe. Yeah, I mean, there are a couple equities here I was looking at in the gold report where that might be a nice bounce. You take a look at New Gold, all right, bouncing up to 268. You hit the lower trend of its channel. There's a couple equities there. But guess what? You know what looks really rough in this gold market right now is these charts. The XAU and the HUI. Let's take this Fibonacci line off there. It's a decisive break. And realistically, you know, for the broad market, yeah, you got a little bit of a bid here, but boy, these are decisive breaks out of the channel from 175 down to almost 140 on the XAU. You jump over the HUI, and it's a similar deal. You have it breaking out of the channel. Yeah, we got quite a bounce going the last couple of days from 285 up to 300. But boy, you look at that chart technically, right? You say, man, we got to get back in that channel. We got to do something. You got a little bounce, but that's what gives me some hesitation on the gold market right now. You know, you look at these gold miners and then you look at gold. Well, gold has quite a little run. But boy, when you look at the XAU and the HUI, that's a daily chart. All right. And you could even, you know, it's an art, not a science, folks. Okay. I mean, maybe you're talking about right off the lows. It's pretty close. All right. If you're into math, you're drawing a little linear regression here. Right. It's a pretty close, well-defined channel line going all the way back to almost the beginning of the year when you started this acceleration and you decisively broke to the downside. Now, we're going to catch a little bit of heat when we get back up to this 156 to 160 area. And we're trading at 150 right now, and maybe you break above that. You know, the market's trying to figure out the trends going forward right now. And those gold miners, we're taking it on the chin. We got gold up $17 off of the lows of 25.41. But it is remarkable that all we're doing is we're right back to where we were on last Tuesday at 26.30. Stay tuned, folks. We'll come back. We'll talk some other equities with news. We'll take a look at MicroStrategy and some others.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, He has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&Ps down 30 points right now. NASDAQ down 63. Dow off 383 right now. And we jump around. So one of the ones, Super Microcomputer. They've got a new auditor. The stock is up about 20% right now. 23%. Don't be too confident in this equity when you look at this chart. Up to 26.41. Now, what's interesting is you have BDO is the new auditor that they've hired. And you got to wonder how those conversations go, right? So you have Ernst & Young stepped down in October this year. They had replaced Deloitte & Touche. In March of 2023. And it told the NASDAQ it believes it'll be able to file its annual report for the year ended June 30th and quarterly report for the period ended September 30th. And said it will remain listed on the NASDAQ pending the exchange's review of the compliance plan. Yeah, be careful on that one. That's what I'll say. You're up 22%. You got extreme volatility across the board there, and they got a new auditor, and that auditor is going to have their hands full because 2 other companies stepped away from that company. There's something going on there. Now, MSTR. MicroStrategy. We were talking about this on the program yesterday. Up to 393.75, 395. You're dealing with extreme leverage in Bitcoin. And if you want it, this is how you can get it, okay? But the reason why I stress it is because Bitcoin, they keep leveraging up as you go further and further up the price chain. Eventually, you're going to get a pullback. And if you get to the type of pullback that's possible in Bitcoin, you could see MicroStrategy pull back to 100 in a heartbeat. Yeah, because you're dealing with highly leveraged crypto plays. You don't get to go from 50 to 400, okay, in crypto without risking it to the downside. Now, you went from 50 to 400 by investing in Bitcoin that went from 40,000 to 90,000. Run that example on the way down. And on the way down is you go back to 50 or even below 50 if you really get a pullback to that degree. All right, and longer term, yeah, you might be okay. But shorter term, you better watch out for that pullback because it's going to be very extreme, to put it lightly. MicroStrategy. All right, what else do we got pulled up? Let's talk about a little bit of Lowe's. So Lowe's out with their numbers. We take a look at the Lowe's chart, LOW, down by 4.1%. There's your acceleration at 260. Now you take a look at the longer term 3-week. off of the lows, no pun intended. Coming into the year at 220, you trade up to 287. We're back by 4% on their numbers. And they were decent numbers. They beat on earnings, and they hiked guidance, but still expect sales to fall this year. It's a tough one when you look at the housing market, right? You look at the people with the inability to access the equity in their houses because you don't want to refinance because rates are so much higher right now than they were when you took out a mortgage. And yeah, they raised the outlook, but still expect full year sales to decline from the prior years. The number there, they expect total sales between 83 to 83.5 billion, slightly higher than what the market was thinking. Comp sales to decline 3 to 3.5%, slightly better than what the market was looking for. But yes, they're still numbers. They're lapping a year ago period when the company lowered its outlook and sales tumbled nearly 13% year over year. Yeah. It also cut its full-year forecast in August as it predicted weak home improvement demand in the back half of the year because of high interest rates. Doesn't matter if you have 100 or 200 grand. Now, eventually, people will hit that breaking point, right? If rates stay where they are over the next 5 or 10 years, that's going to be the norm. People are going to need to access that equity, and they might just have to refinance at 6.5% to take out 100 or 200 grand to upkeep their home, put in necessary renovations, maybe you have a child going away to college, whatever those are. You're just going to eat the interest rate if it stays there, but not yet. We're not there yet. People are trying to hold off as long as they can because they have mortgages at 3.5%, 3%, right? The last thing they do is want to give that up when they could have locked it in the last 10 years or so, really prior to COVID. And yeah, so it's a tough one when it comes to homes. Same deal when you talk about new homes in the same regard. But nonetheless, decent numbers from Lowe's. But yeah, they continue to struggle a bit. All right, what else do we got pulled up? We check out Home Depot on those numbers. Down by 2.1%. Quite a run from them. The lows of last year at 280. We're trading at 401.71. Walmart holding on to the gains, up by 3.3%. We check in on NVIDIA ahead of their earnings. Look at NVIDIA, man. 142.36. Now, yesterday, the news comes out that they're having issues with Blackwell. You trade down from 142 to 137, and we get it all back by the morning. That should be potentially a news story that makes a difference, folks. Their next generation chip is having problems overheating, and they're making changes later in the stage than they usually do to redesign the server racks to provide more cooling for the chips that are going to go into those server racks. I think it was about 72 of the Blackwell chips go into these server racks to create one heck of an AI machine, and they're overheating, and they're making changes to the design of those server racks to keep them cool later in the stages. You know, they're trying to keep it together, but there's volatility that could come down the line. And when you are priced, and this equity is priced, man, at $3.5 trillion. Okay, you can't afford the next chip having any problems when you're priced at $3.5 trillion. So we get to find out tomorrow, 142.67 for NVIDIA right now. You jump over to Intel shares, down by 2.3%. Intel continuing to struggle, man. We're bumping up against these highs of September. That high was 24.66. We're trading at 24.25 right now. You jump over to AMD. Look at these, man. 138.55 continues to struggle to find a bid of any sort for AMD shares. We jump around to some of the banks. Yeah, JP Morgan holding up well. Down by 0.8% today, but holding on to the gains after the election at 243.11. You jump over to Bank of America. Similar, slightly in the red today, but holding on to those gains at 46.37. Citi. Yeah, they're all a little bit lower today, off by 1.4%. Wells Fargo shares down by 0.5%, trading at 73.66. We jump over to some of the airlines. Spirit going BK yesterday. Does that just stop trading? Yeah, it did. So that just stops trading. You jump over to JetBlue. Look at this thing, man. Just since yesterday. Oh, look at this. You're down, what, 15% just since yesterday? You're down $1 on a $7 stock. Yeah, don't touch JetBlue, man. You know, you want to gamble with some cash that you can lose all of it. You can play with JetBlue. But boy, folks, this thing looks like it's teetering on going to zero. You take a look at the longer term chart. You know, yeah, you might turn it around. This thing took from 2007 to 2013 to turn it around last time, and you still ended up where you were 10 years later at $6 and change. You're down another 4.8% for JetBlue this morning. American down by 1.9% right now. Delta off a percentage point as well. United shares down by about 0.3. Look at these accelerations recently. All right, markets in red. We get the S&Ps off by about 40 points. Dow off by 460 this morning. Stay tuned, folks. One more segment. We'll come back. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps off by about 34 points. You see the pop we got of those lows at 58.55 right when I come on the air at 9 a.m. We're trading right now down 33 points or 0.6%. Dow right now off 392 points or 0.9%. We take a look at some of those equities with movement. Walmart up by 3.2% on their numbers. You have Lowe's right now down 4% on their numbers. And likewise, you got Home Depot trading lower on those Lowe's numbers, off by 2.2%. Target did catch a bid on the on the Walmart numbers, but they've given it back. We're down by 0.7% for Target shares right now, trading at 155.40. We keep our eye on yields. The 10-year chopping around at about 109.28 right now, and the dollar just above 106 at 106.31. And gold's finally catching a little bit of a bid, up by $16 at 26.30. We were as high as 26.43. And yeah, keep your eye on the XAU and the HUI though, folks, if you're looking for it. Because as I mentioned, you put that thing, whether it's on a weekly, right, pretty well defined. You put that on a daily, the XAU, well defined. You break below it. We're still below that channel line as gold. The miners, quite a pullback from 175 to 140 and change. We're trading at 149.81 right now. And yeah, you jump over to Bitcoin, holding up so well. 92,395 as the market struggle, as yields have a little volatility. We're basically holding the highs of 93,000. You spike higher a week ago last Wednesday at 94,065, and Bitcoin showing no pause just yet. 92,325. And if you are looking at Bitcoin, you're looking at this chart, we'll finish it up. How about that? An A to B, C to D that starts at the lows of 15,000. You hit your B point at 75. You pull back to the lows that we took off from in August, and you're talking about 108,000 maybe on Bitcoin. We'll end there. How about it? All right, folks, thanks so much for kicking your Tuesday off right here at TFNN. Stay tuned. We got our man Basil Chapman. He's coming up next with the Tiger Technicians Hour. We got our man Steve Rhodes at 11, Fast Market at 12, Larry Pesavento coming up at 1 o'clock, and then we got our man Jacob Shoup at 3. Folks, have a great day. Have a safe day. We'll see you tomorrow. Tomorrow, we got NVIDIA earnings. Have a great Tuesday, everybody.